Hello and welcome back to my trading journey. My name is Tanish and today we're going to talk about trends. So grab your coffee and let's get started. If you're learning trading just like me, understanding trends is going to be literally the first superpower you need. As everyone knows, a trend is something that the majority of the people will follow. It's a collective movement in one direction, whether it's price, behavior, or sentiment. We see this in our day-to-day lives. Even YouTube has a section that tells you what's trending at the moment. In trading, this shows up when most participants are consistently buying or selling, creating a clear upward or downward flow. That becomes visible on the charts. Before strategies, before indicators, before any fancy tools, I have spent the last week learning everything I can to identify these trends on the charts. There are a bunch of other traders that teach this and you can learn it from, but here is my take on sharing what I have learned. Alright, so let's get into it. Alright, so a trend is just a market moving consistently in one direction. That's it. No rocket science. Alright, so the market can go in one of three directions. Upwards or bullish, downwards or bearish, or sideways, which is, in other words, consolidation. 1 second, I believe that makes it better or worse. Don't judge me. Alright, so the way we identify this, let me just go ahead and clean this up. And let's just open TradingView to save everybody the trouble. Alright, so let's just go ahead and type TradingView in a search bar and open this. Okay, let's just continue. Okay, go ahead and create a new account. And let's go ahead and open Bitcoin. Okay, for those who don't know how I did that, on the main page, you're going to click on search and type BTCUSD for Bitcoin. And right over here, we click on launch chart. This right here should be the first screen that you see. You're going to have some stocks and some tickers over here by default. We're going to go ahead and just close that. And let me just actually go ahead real quick and set this up the way I would like it. So 1 minute. Alright, and before you ask, I will have another video which will show you how I set up my TradingView, so don't worry about that. It's probably going to be the next video itself. Alright, to begin with, so let's understand the difference between an uptrend, downtrend, and a sideways trend. We're going to take this part of Bitcoin as an example. Let's draw a line starting from this point downwards. Let's continue that upwards to the next highest point, so on and so forth. Now, if we move this line aside and just look at that, that shows us what an uptrend would technically look like in the market. If we see the first point, what would be the highest point on this line? That would be this point right here. And let's mark it. Similarly, this being the lowest point. Let's just call that low. If we follow this line along, we see that this point right here, or this high, happens to be higher than the previous one. In other words, we can call this a higher high. Similarly, this low point is higher than the previous one. We can call this a higher low. Same thing goes with this and with this. So this is what helps us identify an uptrend, finding higher highs and higher lows on a chart. Let's do that for a downtrend. Okay, so right after that, we see that we have a new trend. This being the highest point on this part of the chart, and this being the lowest point when the price moved downwards. It went back up to this point and back down to this point, back up to this point, down to this point. So if we use this part to identify the high and the low, if we follow this line along, this high is lower than the previous one. As you can see right here. So we can call this a lower high, and we can call this point, if we follow along, a lower low. Similarly, we can call this a lower high because that's lower than the previous one. This a lower low because this is also lower than the previous one, as we can see right here. It's not that much lower, but it is lower. Now that we know how to identify an uptrend and a downtrend, let's see an example for a sideways trend. This here is a good example for a sideways trend where price doesn't make a higher high or a higher low, a lower high or a lower low. The price simply moves sideways. Think of trends like the mood of the market. If it's an uptrend, it feels bullish. If it's in a downtrend, it's depressed. If it's sideways, yeah, that's just the market procrastinating. Most traders lose money because they try to fight the trend. For example, if the market is going down, you're buying. In other words, you're trying to stop a bus with just one hand. You don't ever predict the trend. You recognize them and try to follow them. Trends give you a direction. The direction is equal to an easier trading decision. If there is no trend, there is no trade. So how do we implement that on the charts? One great example of learning how to draw trend lines is by Victoria Duke, aka Tori Trades. Her masterclass makes it very simple to understand how to draw trend lines, and I'm just going to go ahead and do that on my chart right here. So I'm going to go to the 1 month time frame, and I'm going to go ahead and draw a line, or I'm going to use the ray tool at the lowest point. So let's move that to the next point, that's right here, and the next low. Let's just go ahead and make that green and make that more thicker so it's visible. So I see that this is touching 1, 2, and 3 points. I'm going to use the second line starting from this one right here. And I see that touches right there. Let's go ahead and follow that upwards to the next lowest point. Alright, so the way I'm doing that is once I find a point A and a point B, I use the point B as my reference for the next one. That'll be my new point A till the next touch point, which is the point B right here. Again, using that as the reference for the next line, point A to the nearest point B. If the line crosses, for example, right there, If the price breaks that line and crosses, that line is no longer valid. So I'm going to track that back to my new point. That's right here. And now I see that there are no more lines that I can draw. So I'm going to go back down to the 1 week time frame. I'm just going to clean that up a little more. Okay, let's go back to the 1 day. I think I can clean that up a little more right there. There. And this can also be a little more lower. Right there. Technically, that should have been my next point, and if that is my next point, that probably moved this too. Nope, it is fine. Okay, so price does move below this, so I'm just gonna drag it till this point because that movement is technically insignificant. If I draw another line right here, that's just going to be too much of noise. So this line, I don't see much of a point keeping that. I'm just going to use this point as a reference and the second point right there. Let's go around to the 4-hour time frame. That's the time frame we are going to be trading on. I don't see any more lines right there. The 1 hour, let's draw a downward trend. So seeing this, I see that this is the highest point on the chart. Let's go ahead and draw downward trend lines using the same principle. Highest point down to the next touch point, and let's turn that into a red line, and let's change that to a thinner point. Let's go ahead and continue doing that right there. This point down to the next one right there. Oh, this line has no value because price has already crossed that point right there. So let's go ahead and get that to that point. Right there. That is my new touch point B. Or my new touch point A, sorry. And there you go. That technically is my trend lines done. I'm going to go ahead and take one additional step. In addition to the upwards and downwards movement of the market, we also see key areas of interest where price gravitates to naturally. So let's go back to the 1 week time frame. And make horizontal lines at points where price reversed. Basically, at points where the trends came down to and reversed back in the other direction. For example, the first point is right here. I see 1, 2, 3 points. So I'm just going to use that line as a reference right there. That's better. We have price coming up to this point multiple times, and then coming back down to that point. When price broke this point right here, it came all the way up here. And now I'm using the cursor's crosshair. If you see the dotted line, the one that goes horizontal and vertical, we're going to use that to gauge where the price came back up to. So I see it's come so far up. So I'm going to go ahead and draw another horizontal line right there. So I have 1, 2, 3, 4, almost 5 points. Let's go down to a smaller time frame. I'm on the 1 day chart. We can see the trends clearly going upwards, hitting that point, and then going back down, then going back up, reversing back down, then going back up where eventually it breaks that line and goes to the next one, gravitates back to that line, goes back down to the next one, comes back, and eventually breaks that line, and then keeps gravitating back to that line. So we're going to use that as a point of reference. This method of drawing trend lines and identifying trends is what I'm going to use in my strategy. Alright, so now we know how to draw trend lines. With this information, we are now able to start building our strategy. So a strategy is nothing else but it's going to be set of rules that we need to follow for every trade. That's what makes us a disciplined trader. The only way we end up profitable by trading is by being disciplined and not end up like the rest of the 95% that lose money. So how do we stay disciplined? We make ourselves a set of rules. We are going to use trend lines as our rule number 1. Identify the trend, which simply means if the market is in an uptrend, we are only allowed to take long positions. And if the market is in a downtrend, we will only be allowed to take short positions. If the market is in a consolidation or a sideways trend, we don't trade that market. As simple as that. Okay, so what are my biggest takeaways from this? If I had to summarize everything I learned, trend lines are simple if you stop forcing them. Higher time frames are always better than lower time frames, which means a 1-day time frame and a 4-hour time frame will always be better than a 30-minute, a 5-minute, or a 10-minute time frame. It'll give you a more genuine structure to the trend. And after understanding all these rules, it has made it much more easier for me to understand how to build my strategy. So if you're learning to trade like me, one suggestion would be keep your charts simple. Don't fill them with multiple different tools and different confluences, which is only going to give you more confusion. Trend lines are just one part of the puzzle, and if used correctly, they can help you build your strategy from the ground up with a good base. If you found this video helpful, subscribe and leave a comment for what you might want me to cover in my future videos. Thank you for watching, and stay tuned for rule number 2. Peace.